U.S. Market Weekly Summary, week ending January 17, 2025. The U.S. stock market had a noteworthy week, with the Standard & Poor's 500 index logging a 2.9% gain amidst easing inflationary pressures and impressive earnings from major banks. This marks the first increase in 3 weeks for the benchmark equity index, which closed Friday's session at 5,996.66, up from last week's close of 5,827.04. Market overview, sector gains, and economic indicators. All sectors posted gains, with financials and energy leading the charge, each rising by 6.1%. The materials sector wasn't far behind, closing 6% higher. This broad-based rally was fueled by a combination of positive economic indicators and strong corporate earnings. Inflationary pressures ease. Official consumer inflation data released this week indicated a deceleration in core inflation, which excludes the volatile food and energy components. This unexpected slowdown provided relief to market participants and signaled that inflationary pressures might be easing. Stifel noted in a client report that a somewhat benign reading in core consumer inflation on Wednesday, coupled with a relatively cooler producer price index report on Tuesday, offers welcome relief for a Federal Reserve increasingly concerned about an acceleration in cost pressures. Retail sales and housing market insights. Retail sales rose at a slower than expected pace last month, yet there was a surprising uptick in homebuilder confidence in January. Housing starts exceeded expectations, further supporting the positive outlook for the housing market. With these economic indicators in mind, markets widely anticipate that the Federal Open Market Committee will hold interest rates steady later this month, according to the CME FedWatch tool. Global economic outlook and political developments. The International Monetary Fund, IMF, raised its global and U.S. economic growth expectations for this year. However, it cautioned that the balance of risks to the overall outlook remains tilted to the downside in the medium term. Adding to the week's developments, President-elect Donald Trump is scheduled to take office on Monday. Bank earnings propel financial sector. Strong earnings reports from major banks significantly contributed to the financial sector's weekly gain. J.P. Morgan Chase, JPM, Goldman Sachs, GS, Citigroup, C, Bank of America, BAC, and Morgan Stanley, MS, all reported Q4 financial results that exceeded Wall Street's expectations. Sector highlights. The materials sector's rise was bolstered by a 12% increase in Celanese, CE, following an upgrade at B of A Securities. The industrial sector climbed 4.8%, driven by a 15% surge in United Rentals, URI, which agreed to acquire Hand Equipment Services, HEES, in an all-cash deal valued at approximately $4.8 billion. Real estate saw a 4.8% weekly gain, with Timber Real Estate Investment Trust Weyerhaeuser, WY, jumping 11% after receiving an upgrade from CIBC. The utilities sector rose 4.3%, despite a 3.5% decline in Edison International, EIX, which is facing a lawsuit alleging its equipment ignited a wildfire in Los Angeles, according to Bloomberg. The consumer staples sector posted a 1.3% gain for the week, despite a 5.7% drop in Target, TGT, which maintained its Q4 earnings forecast while enhancing its comparable sales guidance. Healthcare and major companies' performance. The healthcare sector experienced a modest 0.3% weekly rise, partly due to an 8.5% increase in Dexcom, DXCM, which received an upgrade at Baird. However, drug makers Moderna, mRNA, and Eli Lilly, LLY, lowered their full-year revenue expectations, resulting in their shares falling by 19% and 9.3%, respectively, for the week. Upcoming earnings reports and economic data. Looking ahead, major companies scheduled to report results next week include Netflix, NFLX, Johnson & Johnson, J&J, Charles Schwab, SCHW, Intuitive Surgical, ISRG, American Express, AXP, and Procter & Gamble, PG. Next week's economic calendar will feature the existing home sales report for December and the University of Michigan's preliminary reading of consumer sentiment for January, both due on Friday. It is important to note that markets will be closed on Monday in observance of Martin Luther King Jr. This week's market performance and upcoming economic events suggest a dynamic period ahead for investors and analysts alike. With key earnings reports on the horizon and a continued focus on inflationary trends, the coming weeks will be critical in shaping the market's direction.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.